Hi everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that might sound like watching paint dry, but trust me, there are hidden stories in those numbers. We're going to look at NexPoint Capital and see what their latest filing, their 8K report, tells us about where they're headed. In this report dated April of 2025, we're going to uncover a few key announcements from NexPoint Capital, like their cash distributions and the value of their stock. It's like a sneak peek into their financial health and future plans. First up, let's talk about cash distributions. It's basically how much money the company is handing out to its shareholders. The board of directors, that's the group of people at the top making big decisions, declared a cash distribution of $0.09 per share of the company's common stock. That means if you own shares of NexPoint Capital, you're getting 9 cents for every share you own. This payment happened in April, and you had to be a stockholder of record back in March to get it. Now, let's move on to something called net asset value, or AVE. Think of it as the estimated worth of each share. As of March of 2025, the net asset value per share was determined to be $5.77. That's according to the company's investment advisor, that's their consultant, who uses a set of rules approved by the board of the company. This is important because it also affects the price at which the company issues shares under what's called a distribution reinvestment plan, or DRP. The DRP lets you reinvest your dividends or the money you receive from owning stock back into buying more shares of the company. The price they sell those shares to you can't be less than $5.07, and it won't be more than 2.5% above that. Here's a bit of a disclaimer from the company, a warning. They say that figuring out the tax details of these payments, these distributions, is done at the end of the year. So what you see now might not be exactly how it looks when tax season comes around. They'll send you a form, a 1099 DIV, to help you report everything correctly. They also warn that future payments, future distributions are not guaranteed. The board could change their mind and the law could change. So don't count on getting the same amount forever. Here's something a bit technical but important. Sometimes the company might pay out more money than it actually earned. If this happens, part of your payment might be considered a return of capital, which has different tax implications. Basically, it means they're giving you back some of your original investment instead of profits. And just to repeat, they can't promise they'll keep paying out at the same rate or even at all. Now, the company includes what they call forward-looking statements. Think of these as educated guesses about the future. They use words like believes, XYs, and projects. But they also warn that things could change, and what they predict might not actually happen. They say they're not promising to update these guesses even if new information comes out. Finally, the report has a signature, a name at the bottom. It's signed by Frank Waterhouse, who is the Principal Financial Officer, Principal Accounting Officer, and Treasurer. It's like the official stamp saying, yes, this is real backed. Now let's step back and look at the bigger picture. What does this all mean? First, the cash distribution of $0.099 per share might seem small, but it's a tangible return for investors. That's people who own the stock. It's like getting a little thank you for investing in the company. The net asset value of $5.77 per share gives a snapshot of what the company thinks each share is worth. This is important for anyone looking to buy or sell the stock. The company is basically saying, we're trying to be transparent, but the future is uncertain. They're not promising anything, but they're giving you the information they have right now. So what's the takeaway? NexPoint Capital is making some moves. They're paying out dividends, they're keeping an eye on their net asset value, and they're being upfront about the risks. One thing to consider is whether the company can sustain these distributions, these payments in the future. If they're relying on things like selling assets, then that might not be a long-term strategy. It's like selling your furniture to pay the bills. It works for a while, but eventually you run out of furniture. Also, keep an eye on those forward-looking statements. It's good that the company is thinking about the future, but remember that these are just predictions, not guarantees. The financial world is tough. Overall, NexPoint Capital seems to be doing okay, but like any investment, there are risks involved. It's important to do your own research and not just rely on what the company says. Look at their past performance, see what the experts are saying, and decide if it's the right fit for your investment goals. So that's the story hidden in this 8K filing. It's not the most exciting read, but hopefully this breakdown has made it a little easier to understand. Thanks for tuning in to Corporate Decoder. If you found this helpful, please hit the like button, leave a comment, and subscribe for more deep dives into the world of corporate finance. Until next time.